Hello folks, Sid Miramatsu here with Miramatsu Capital. In this week's program, I'd like to cover what is protecting your assets in retirement. Folks, many of us, because we're getting paid every 2 weeks, the markets go up and down and we're saving through our 401k plan or our IRA account, or maybe saving through just a regular investment account or savings account for that matter. And we're 2 years away from retirement, we're 5 years away from retirement, we're 10 years or 20 years away. So we don't concern ourselves too much with what's happening with the markets, what those investments really mean exactly. And so we kind of ride things out as they go. Well, let me tell you a story about Anthony. Anthony retired from one of the major companies here in Southern California that we've been working with for years. And about 3 years prior to retirement, Anthony contacted us and he said, "Hey Sid, I haven't been paying attention to my monies for the last 35 years. It's grown to a decent amount of money, but I don't know what that means. I've just known that I've been diligently saving." Well, as we do with everyone that becomes a client, we manage their portfolio every 30 to 45 days. That means that once you become a client, we look at your investments every 30 to 45 days with you on the phone or via Skype or directly one-on-one. So that way we're engaged and we know exactly what's happening with your investments, what's happening with your money, and what's happening with the risk in those investments. And just like you would through any project at work, you would monitor, if it was a multi-million-dollar project, it meant what's happening in your department's program, well, you would be monitoring that project probably much more often than even every 30 to 45 days. Well, in Tony's case, or Anthony's case, we decided, hey, you know what we're going to do with your program that you're 3 years away, we're going to monitor it with you at least every quarter, and as we get to 18 months from retirement, we're going to monitor it every 45 days, and then of course, once we are at retirement, we're going to monitor it every 30 to 45 days. So in Anthony's case, as he got closer to retirement, he started understanding more and more and more what the investments in his portfolio really meant to him, what risk he was really in, and if they're really paying out the income that he thought he would need it for retirement. Because in lots of cases, your investments may be way off what you really need for your retirement. We have to completely restructure those investments. Those things should start dialing in as you get closer and closer. Your focus should continue to be clearer and clearer and clearer the closer that we get to retirement. So as time goes on, folks, it's very, very important, just like you would at work. You're in a project, you're managing a product for the rest of your career, well, or a new project, you're monitoring that very, very closely, probably daily or at least weekly. Well, we want to continue managing your investments and protecting those assets, and the only way to do that is to monitor it regularly through what's called our constant communication and analysis model. If you have any questions, we look forward to your time. Thanks so much.